Hey there, this is Georgia Brew and Eric Bodiwala with Elevate the Game podcast. We're looking forward to our upcoming call, and thanks in advance for taking a few minutes to watch this. It will make our time together very productive for you. We recently had the pleasure of being featured on the Property Profits podcast, and I wanted to share some highlights with you. In this episode, we discuss why investing in multifamily properties can be such a powerful strategy for generating secure, double-digit returns.
Yeah, that's right, George. And the insights we're going to cover are going to give you a much clearer picture of how we can help you achieve your financial goals, without the headaches of being a landlord and, dealing with all that mess. I hope this gives you some great context before our upcoming call. So enjoy this episode, and we look forward to chatting with you soon.
Hey, gang, welcome back. Very excited to be interviewing not one, but two very successful real estate entrepreneurs. We've got Eric Bodiwala and George Abrao, who are both fellow podcasters. You've got the Elevate the Game podcast, and they are the owners of Elevate Commercial Investment Group. So, gentlemen, welcome to the show. Excited to talk with you.
We're excited to be here and
Thanks
talking
for
with you.
having us, Dave.
All right, very good. So, gentlemen, I know that you're involved in what's called multifamily real estate investing. In other words, you and your investors buy apartment buildings. So, to get things started, maybe give us a little snapshot that at the time of the recording this, what does your current real estate portfolio look like? Like, how many of these different apartment buildings or apartment building communities do you and your investors currently own?
We've got right around 5,000 units right now, which is split
Wow.
up in between I believe 18 or so properties, right, Eric?
Yeah, 7 different states.
Yeah.
7 states, 18 properties, 5,000 different rental apartments. That is pretty huge, you guys. So how long have you been doing this for? When did you start buying these apartment buildings?
I mean, Eric and I have been in real estate for about 20 years now. And then multifamily apartments has been our main focus for going on 8 years now. Um, yeah, and that's in that span of time is when we've bought those 5,000 units, or actually more than that because we've exited close to 2,000 of them.
Oh wow. Okay. So it's been a lot more over that time. So you guys, you've become very, very good at real estate investing. Now there's all sorts of different kinds of ways people can invest. I mean, there's stocks and bonds and crypto and just putting all your money with a financial planner and insurance products and this, that, the other thing. Why do you guys think that real estate is the way to go? Why are you so big of fans of real estate as an investment class? Maybe Eric, do you want to?
Yeah, sure, I'll take it. Yeah, I think in general, Dave, I mean, look, real estate has created more millionaires than any other profession. And, for the most part, multifamily is one of the securest real estate asset classes. People are always going to need a apartment to live in. Even when the market goes down, they can't afford a home. They go and they look to rent an apartment building. And as long as you can provide a good quality apartment where you can improve the quality of their life, they're going to rent there, right? And which means, you can always improve it and then raise income and make sure that the money grows and the asset secures. So we love multifamily. We've been doing it for, like George said, about 8 years now.
Very good. So I've also heard that there's a, you know, it's one of these things, there's a huge demand for it. There's a huge demand and a kind of a supply and demand is in the favor of people that own apartment buildings. What's your take on that?
Yeah, I mean, when you look at the fundamentals, I mean, owning a home has only become more and more expensive, right? And unaffordable, which pushes a lot of demand towards renting.
Mhm.
When you look at the population growth, especially in the certain areas that we're investing in and the markets we're in, like Eric mentioned, we're in 7 different markets. Those are very strategic markets where we see the population growth and the job growth and where there's just not enough housing. So when you have all that demand and not enough supply, that's when we're able to come in and, be able to push the rents and push the income and really create that value in the apartments.
Yeah, very good. All right. And one of the things I really picked up that Eric was talking about was that when times are good, people are moving into the area. They need a place to live. What are they going to do? They're going to rent an apartment. And then when times are bad, that's unfortunate, but it also means, unfortunately, a number of homeowners are having to downsize. They can no longer afford their homes, but they still need somewhere to live. So the most affordable option quite often is an apartment. So I don't know if it's recession proof, but it's pretty recession resistant, would you say?
Yeah, I agree 100%. I mean, that's why, these lenders, they put out 50, 60, 70, $100 million loans on these apartments because they feel like the collateral is always going to be protected. So we always look at it as the bigger picture, right? There's always a bigger fish in the room. And when, lenders and banks and institutions are investing that type of money, it's because they feel like it's secure, right? People are always going to need a place to live and they know that their money's always going to be protected.
Yeah, good, a very, very good point. So, George, maybe tell us a little bit about how the money is actually made when you and your investors buy an apartment building. You kind of alluded to the fact that, if supply and demand, if there's a lot more demand than there's supply, then you can increase the rents. That's going to increase the cash flow a bit. But what are some of the other ways that you and your investors profit from an apartment building?
Yeah, I'm glad you asked that because I mean that's really once I learned that, that's what opened my eyes to multifamily. It's not like a single family home where you just take the comps in the area and that's what it's worth, right?
Yeah.
Depending on what the comps are. With multifamily, it's you're really buying a business. So it's all about the net operating income. So if you're able to increase the income on that property or lower the expenses, however you get there, right? Um, that then multiplies the value of the property depending on a cap rate. I don't want to get too go
Yeah,
down.
let's not get too technical, but
Yeah.
bottom line is like, ballpark numbers here, you guys. If you had like a 150 unit apartment building and you were able to lower the expenses or increase the rents and generate an extra $100 a month per for each one of those 150 units, what kind of an impact could that have on the value of the property?
Yeah, just increasing 100 a month to one unit, right? Let's use that as a quick example. Um, you're increasing the value of that property by 20,000.
Wow. Okay, so multiply that by 150 units. That's where it gets pretty exciting. And again, we don't want to get into the weeds here, you guys, but the idea is the bank is looking at this like a business and how profitable is this building as a business. So when you've increased the profitability $100 per door per unit, that translates into a massive increase in the value of the property. So that's one of the ways that you and your investors really make a lot of money from these apartment buildings. Cash flow is another way. It doesn't make that kind of return, but it's kind of that steady Eddie monthly profit in the bank. What are some of the other ways that your investors profit from multifamily?
Yeah, so that's forcing the appreciation, what I mentioned, right, by adding the value.
Yeah.
But you also get the appreciation of real estate in general. So over time, it goes up.
Mhm.
You've also got some tax savings as well, some depreciation that you're able to get as an investor. And when you combine those tax benefits and the cash on cash, and then the value going up, I mean, it's you have the opportunity to make double digit returns versus the stock market on average is somewhere in the 8% range or wherever it is. Um, but it's not easy to get those double digit returns.
Right. Okay, that makes a lot of sense. So, Eric, I think you guys, when you're buying these apartment buildings, they ain't cheap. Right.
Definitely not.
So, so what's kind of like one of the more recent acquisitions you guys have done? What was the price tag on that? Just to give us an idea.
Yeah, so a recent acquisition, we paid about $160,000 a unit.
So for the
Um,
whole building, how much was it?
that was about 23 million
Okay, so
is what we paid
$23
for.
million. Dollars. The bank doesn't loan you $23 million dollars to purchase one of these properties. So you have to come up
No,
with kind of like we do with a house, right? You have to come up with some
yeah,
down payment money and different costs for different things. So that's where your investors come in. Is that correct?
correct. Yeah, they'll lend you roughly 70%, and then we have to bring in roughly 30%.
So the bank will lend 70%. You guys have to, with your investor partners, come up with 30%. So on that, how much did you say that deal was? How many million was that?
That was like 23 million.
23 million. So help me with the math there. So
Yeah,
you're
so we
looking
had to
at
bring in
7
roughly $7
million.
million.
$7 million.
Yeah.
So when you're working with investors, do you syndicate these properties? Do you have a fund? How is it that you put your investors' money together to buy these kind of
Yeah,
properties?
absolutely. It's a syndication, right? And it's a beautiful thing because it's a way where, you know, people that don't know how they can be involved or own apartments can come in and share in the ownership, right? So we run the property as the operators, but then the investors come in and they come in as limited partners or passive investors, and then we do all the work, and run boots on the ground, and then we share in the profits, once it's sold. And usually those profits mainly go to the investors. The majority of it goes to the investors, and it's usually about a 70-30 split. 70% goes to the investors and 30% goes to the general partners. So
Okay,
it's
so
really a
are you
beautiful.
bringing on seven big hitters with $1 million each, or are you divvying it up into smaller chunks?
No, normally, our syndications are normally smaller check sizes, anywhere from, 50,000 and up. And generally, we're taking probably, I don't know, maybe 20 to 50 investors on any given deal, depending on the size of it.
Got it. Okay, that makes sense. So that's a beautiful way for, everyday people, busy professionals, business owners, etc., to get into apartment building investing, but not having to come up with the 7 million themselves, not having to figure out how to do all this stuff, not having to take 3 a.m. plug toilet phone calls, all that kind of yucky stuff
Yeah.
people don't want to deal with. In investing, you guys take care of that. They bring in the capital for the down payment, and you share in the proceeds of the upside of the deals, the profit centers. Very, very cool. So you guys, there must be some questions that kind of come up from potential investors from time to time. What are some of the concerns people have about this whole idea of investing in multifamily and buying apartment buildings and syndicating deals?
Yeah, I know some of the things that come up sometimes are, do we need to invest with a company or can we invest with a retirement fund or us, personally?
Hmm.
And the answer to that is yes to all those. You can, you can invest through a retirement fund, you can invest through your personal name, you can invest through a company name, you can invest through any of those
Okay,
avenues.
there's flexibility there.
Yep.
Okay,
Yeah.
very cool. And Eric, how about you? Are there any
Yeah,
questions
I
that come up?
mean, another question is, hey, do I need to leave my money in the deal for, 5 years? Because most of these deals are projected to be 5 years. And we tell them, at the minimum, we project 5 years, but we can always exit, sooner, depending on, the market and, when we can deliver the returns to our investors. None of our returns are guaranteed, but, everything is based on projections. And we, as long as we feel confident we can hit them, then, we'll exit early if we can.
Okay, very good. So it's not necessarily a super long thing, but I think probably people should come in with that in mind, what the
100%.
typical kind of time frame is. And
Yeah.
actually, if you take a look at most investments, it takes a few years for them to really kick into gear and
Yeah.
start creating returns. Very, very good. So, gentlemen, maybe tell me what's one of your favorite success stories of a deal that just really worked out well for your investors and for yourselves. Can you kind of paint us a picture there?
Yeah, sure. I can take it. I mean, we had a deal in Augusta, Georgia. It was a smaller apartment building. Can't remember the unit size right now, but we were able to come in, implement the business plan, turn units, and in a matter of 18 months, speaking of my last point, in a matter of 18 months, we were able to implement the business plan, sell it, and deliver over a 2x return to all of our investors. Right now, that doesn't happen all the time. We kind of rode the wave of the market in an appreciating market. But it was awesome, right? People were expected to be in it for 5 years, and we were only there for 18 months. And so their internal rate of return was much higher. And it was great. It was a huge win for all of us, and definitely a success story that we're proud of.
Yeah, I'm not even sure what that rate of return is. If you doubled their money in 18 months, that's
It
It
was
was
pretty
very
high,
high.
better than a CD at the bank, that's for sure.
100%.
Awesome, you guys. Well, that is great. So if people are interested in finding out more about you and Elevate your company, where can they go? What should they do? What's your website?
Yeah, website's the best. I mean, we got a ton of information on there, free education and whatnot. It's Elevate CIG, so it stands for Commercial Investment Group, elevatecig.com, and reach out to us through the website.
Awesome. Eric, George, this has been a lot of fun. Congratulations on your success. These 8 years have been very, very productive. My goodness, Having a portfolio of 18 different apartment buildings, 5,000 rental units, that's very, very impressive. So good on you, and keep up the good work.
Appreciate it, Dave. Thank you.
Yep. Thank you, Dave.
All right, everybody, take care. We'll see you on the next one.
We hope you found this conversation valuable. We always enjoy talking with Dave because he asks the questions that really matter to people who are exploring new investment opportunities.
Yeah, so during our upcoming call, we're going to take a deeper dive and help you achieve your financial goals with secure, high return investments in multifamily properties. Feel free to bring any questions you have, and we're here to help. So thanks again for watching, and we look forward to our call. See you soon.